Hello, hello, hello. I'm back again just to give an update with regards to three key factors on what has taken place last week and some of the things that I've been able to touch on that I couldn't or I didn't touch on last time. The Davos 2025 has come and gone, and there were a number of discussions that took place. But however, of interest to us is the panel that was discussing the cryptocurrency. The panel was moderated by Serena Saravastav from the Business Insider. She featured prominent people and figures in the crypto and financial markets. The panelists included Lesetja Kganyago, the governor of the South African Reserve Bank, Jennifer Johnson, the CEO of Franklin Resources, Brian Armstrong, that we know, CEO of Coinbase, Danielle Dixon, CEO of Stellar Development Foundation, and Anthony Scaramucci, the founder of Skybridge Capital. The Mooch, as well as Brian, are well-known figures in the cryptocurrency market, and we know them very well in our world. And the discussion really centered around the state of cryptocurrencies ecosystem, the regulatory challenges, as well as the future of digital currencies. The key points really in summary to talk about the Sage input really described the ecosystem as a dynamic but volatile with growing institutional interest. So he emphasized the need for clear, coordinated regulation and a learning process between the regulators and the industry players. But Jennifer Johnson, she highlighted the disconnect between the traditional finance and the crypto space, noting that many in traditional finance are unaware of the rapid growth in crypto. Brian expressed optimism, citing the end of the hostile regulatory environment in the US and the potential for new legislation to spur investment. He emphasized crypto's role in increasing economic freedom globally. Danielle, from her side, she stressed the importance of focusing on the utility and velocity of crypto assets rather than just market speculation. And the Mooch praised President Trump and his administration on the pro-crypto spends, as well as the predicted bipartisan regulatory clarity in the near future. On the challenges, the panel agreed that regulatory uncertainty has been a major hurdle, particularly in the US. They discussed the need for clear, fair, and consistent regulations that foster innovation while protecting consumers. Mr. Kganyago, or Lesetja Kganyago, cautioned against regulatory capture and emphasized the importance of transparent, techno-agnostic regulation. Brian, as well as Scaramucci, the Mooch, highlighted the role of pro-crypto voters in influencing political outcomes, such as the defeat of the anti-crypto policies of the politicians like Sherrod Brown or the Biden administration. On Trump's influence, the panel acknowledged the significant impact of Donald Trump's pro-crypto stance, which has boosted the market confidence and led to record highs on Bitcoin prices. And we have seen that Bitcoin going all the way up to $109,000 US. Anthony Scaramucci noted that Trump has created a bipartisan support to push for crypto-friendly legislation, which could be finalized by 2026. The meme coin, as well as the market speculation, well, what was discussed there, the discussion touched on the rise of the meme coins, such as the Trump meme coin, which saw a $50 billion US market cap in 48 hours. Remember, we spoke about this in our review of the past week, where we spoke about the Trump token as well as the Melania token, the First Lady's token. While some panelists saw this as a harmful to the industry's reputation, others viewed as a natural part of the internet culture and innovation. And we spoke about the meme coins' role that they play in terms of the culture, the innovation, as well as the space they play in the GameFi. And we spoke about this when we were talking about the meme coin narrative. What was the importance of the meme coin narrative? So those episodes that we had done, please go and refer to those episodes because they bring context to what we talk about now as we go and analyze the global events. And the panelists agreed that mass adoption of crypto is still in its early stages, with about 500 million users globally. They emphasized the need for better experience, regulatory clarity, and integration with traditional financial systems to reach billions of users. Brian predicted that stablecoin payments would continue to grow rapidly, while Jennifer Johnson highlighted the importance of regulatory clarity for traditional firms to enter the space. Lesetja Kganyago stressed the need to reduce cross-border payments costs using emerging technologies. The panel concluded with optimism about the future of crypto, driven by regulatory clarity, technological innovation, and the increasing global adoption. The discussion underscored the transformative panel of the blockchain technology in reshaping the financial systems and improving the economic freedom worldwide. So that's the discussion that was taking place from the World Economic Forum in Davos. But the of importance to us as the crypto traders is the fact that even Davos is now discussing crypto. It's not in the periphery. There is a dedicated specific time for crypto, which means there is adoption, yes, albeit in the early stages, but there is adoption of the cryptocurrency. We will talk about other emerging developments going forward. Yes, on the last day at Davos, President Trump phoned in and gave an address to all the delegates that were at the World Economic Forum. We spoke about this in the previous episode, so please go and check what he said. But the impact, though, we spoke about the impact on regulation from what President Trump spoke about, and that was more on the European Union that he was talking about in terms of the regulatory hurdles that he himself faced as a business person and a number of businessmen from the US had faced. Yes, definitely he made mention of a lot of other things, but however, to us of interest, it's the policy or the regulatory changes and the impact of the regulatory changes that are coming. On the central banks side, I wanted to just touch on what has been happening around the central banks. The ECB, which is the European Central Bank, decided to hold interest rates steady during its most recent policy meeting, continuing the trend of maintaining rates at the current levels for the fifth consecutive meeting. However, the ECB signaled potential future adjustments, indicating that if inflation continues to decrease as expected, it might be appropriate to lower the rates. ECB President Christine Lagarde emphasized a data-dependent approach, suggesting bearing significant shocks, the bank could consider rate cuts in the near future to prevent falling behind the inflation curve. This dovish stance was reflected in the comments from various ECB policymakers hinting at a possible cut. We would expect some review from the ECB looking at the European market and the performance in that market and the strains that the market is faced around the energy-related matters stemming from positions that NATO has taken, the price of oil in the Middle East or oil production. So there is a huge impact that European countries have with regards to the price of energy. So one does expect that there could be a review very soon, notwithstanding the fact that President Trump in his address in Davos, he also made mention of lowering the interest rates, but he spoke about them in the US. And I think what happens in the US reverberates across the world. The Bank of Japan, the BOJ, they made headlines by raising their reference rate by 25 basis points to a 0.5%, marking the highest in 17 years. This decision was coupled with an increase in inflation forecast, signaling a cautious tightening of the monetary policy. The move was anticipated by markets with a 90% chance of a rate hike, which also aimed at strengthening the yen amidst concerns over tariffs linked to Trump's policies. Despite this, the yen to US dollar, despite this rate hike, the Bank of Japan, the BOJ, has been cautious about committing to further increases, highlighting the sensitivity of the yen to US bonds yields and the Federal Reserve policies. Other major central banks, the Fed, the FOMC, the Fed decided to keep the interest rate unchanged at their last meeting. However, there is an expectation of a potential rate cut in the upcoming month, with market sentiments leaning towards possible reductions in March and May. This reflects the Fed's ongoing assessment of the inflation and economic data, aiming to navigate towards a soft landing to the economy. And we noted the unemployment numbers in the US when they came up, as well as the inflation numbers. So it's key to listen to those episodes that we went through. The Bank of England, although specific decisions from the past weren't detailed, although they didn't detail their decisions in the past, general market expectation and previous trends suggest cautious approach, possibly leaning towards dovish signals similar to the ECB due to the global economic climate and domestic inflation pressures. The Swiss National Bank, the SNB, is noted for its policy of maintaining status quo in recent meetings, with expectation that it would continue this trend without a significant shift in policy due to the stable Swiss franc and controlled inflation rates. So, in summary, the past week's decision by major central banks shows a cautious approach towards tightening monetary policy, with inclination towards dovish signals, particularly from the ECB and the BOJ, anticipating rate cuts or pauses in rate hikes to manage inflation and economic growth. So, what are the announcements that we expect then in the next week from major central banks? Well, if you start with the BOJ is scheduled to hold its next policy meeting across Tuesday and Wednesday. This meeting could potentially discuss the policy normalization or adjustments based on recent economic indicators and inflation forecasts. The Fed's FOMC, the Fed's highly anticipated two-day meeting gets underway on Tuesday with expectation of possibly initiating a rate cut cycle. This meeting will be crucial as it might set the tone for the U.S. monetary policy in the light of recent economic data. I spoke about that earlier on, and also take into account the pronouncements or announcements that were made by President Trump, where he said the interest rate must go down. The ECB is also set to announce its latest decision on Thursday. There is a strong expectation of a 25 basis point rate cut, reflecting the ECB's ongoing efforts to manage inflation and stimulate growth within the Eurozone. The BOE will follow on Thursday with its rate decision. Market sentiment suggests they may hold rates steadily, although there's discussions about potential future cuts if the economic conditions warrants. The BOC, Bank of Canada, this time, although not explicitly mentioned in provided the context for next week, the BOC typically aligned its policy announcements with the Fed, suggesting a possible rate cut or commentary might accompany the Fed's decision. Bank of Norway, scheduled for Thursday, and the Norges Bank's decision could reflect adjustments due to recent economic developments, including the currency movements and inflation. The South African Reserve Bank, also scheduled for Thursday, The SARB's decision will be of interest, particularly to local markets in South Africa, potentially discussing strategies in response to global economic trends. These meetings indicate a busy week for central banks' policies, with each bank potentially offering insights into their views of inflation, economic growth, and future monetary policy. So that's what globally will be taking place from the central banks. And as a result, it's important for us to understand these market movements and the impact on liquidity and what we would expect from our crypto market. However, we still remain bullish with the developments in the US, though we have to be very cautious because some are looking at, in terms of the technical analysis, we're picking up a bullish trend within the crypto, more especially on Bitcoin. Now, we spoke about this in our previous videos, so please do your technical analysis. You will be aware of what we're talking about in terms of that bullish trend, and certainly in terms of the bearish sentiment in the market that we spoke about in our end of the year video. We spoke about a bearish sentiment that says there's a potential chance that Bitcoin could fall all the way to the $70,000 mark. Potentially. It doesn't mean it's going to happen. Potentially, if you look at your fee retracements, that's where the traders are looking at as a potential level if Bitcoin were to fall from where it's at. But at the moment, we're seeing choppiness, and that choppiness is around $104,000. Okay, let's go to the next item. The next item, we didn't speak about this in detail now. We want to just touch on it. It's the crypto review channel that was appointed by President Trump. The interest, there's the positivity about that review panel, but there's the interest about one of the players in that panel that we would want to talk about. So the panelists are two individuals. It's David Sachs. We'll talk more about him because he's a well-known individual in the crypto market, and Bo Hines. Bo Hines is an executive director of the Presidential Council of Advisors for Digital Assets. So he is a politician, a Republican, and with this main focus around infrastructure, but he sits on that Presidential Advisory Council. But David Sachs, those who don't know David Sachs, who is David Sachs? Well, David Sachs is a prominent figure in technology and finance sector, and noted for his entrepreneurial ventures and investments, and now his role in Donald Trump's administration. His background really, he was born in Cape Town, South Africa, and moved to the US at an early age, growing up in Tennessee. Graduated from Stanford University with a degree in economics and later from the University of Chicago with a law degree. So Sachs is a member of the so-called PayPal Mafia, a group of former PayPal employees who went to found or invest in major tech companies. At PayPal, he served as the chief operating officer, working alongside figures like Elon Musk and Peter Thiel. On the entrepreneurial side, after PayPal, Sachs founded several ventures. One was Yammer, an enterprise social networking platform, which he sold to Microsoft for $1.2 billion in 2012. Zenefits, a human resources software company where he was the CEO until 2026. His investments has been in a number of venture capital areas through his firm Craft Ventures, which invested in a number of startups. Some notable startups that he invested on was Facebook, Uber, Airbnb, and SpaceX. Crypto-related projects that he invested in was DYDX, BitGo, and Multicoin Capital, where he served as limited partner. He also hosts an all-in podcast with other tech luminaries like Jamath Palihapitiya, Jason Calacanis, as well as David Friedman, where they discuss technology, economics, and politics from a conservative libertarian perspective. So within President Trump, Sachs was appointed as the White House AI and crypto czar. So this czar term, so this role involves guiding policy on artificial intelligence and cryptocurrency, two areas deemed critical for America's competitiveness. His responsibilities include establishing a legal framework for crypto industry, safeguarding free speech online, and addressing big tech bias and censorship. He also chairs the Presidential Council of Advisors for Science and Technology, influencing policy recommendations on AI and crypto. Sachs has been vocal about his views on cryptocurrency, advocating for a regulatory environment that supports innovation while providing clarity for business. He has publicly supported Bitcoin and other cryptocurrencies, seeing them as part of the vision behind PayPal to create a decentralized financial systems. Controversies? Well, regulation versus innovation. His appointment has been met with both optimism and skepticism from the crypto community. So this is the skepticism that the crypto community has. Some of them, where some see him as a champion of blockchain technology, others see him, are concerned about him. They see him with the conflict of interest due to his investments in the sector. His approach is expected to lean towards deregulation to spur innovation, aligning with Trump's policies. 6. Advocates for open source approach on AI, which could influence how AI policies are shaped, possibly favoring competition over monopoly. So this is the round of what we didn't touch on our weekly review. So we spoke about Davos 2025, what were the crypto-related sessions, as well as the summary of what took place from that panel, as well as talking about what were the developments in the global central banks, which ones have made what decisions. The BOJ's decision to lower the interest rates, to hike the interest rates as they had done, it has been long expected. In the last quarter of last year, they were forced to do that to rescue the yen and the inflation. And there were impacts from the market, but it would appear now that the market has already priced in what was expected. The Feds, on the other side, have been on the lowering of the interest rate cycle, with Chairman Powell emphasizing how the data is the driver for the committee to make such decisions. So when they meet from Tuesday, Wednesday, we are expecting that they would be looking at the economic data. But one cannot run away from the fact that the announcements that were made by President Trump, they will play a role, even though when the announcements are made by the chair of the FMOC, Chair Powell, he would try to play down significantly the impact or the role of politicians in terms of the decisions that are made by the Feds. So we do expect that the Federal Reserve might lower the interest rates, but so at worst, they will keep the interest rates the same. At best, they will lower the interest rates. So those are the expectations. If the Fed lower the interest rates, we know what will happen with the European Bank. We know what will happen with the Bank of England. We expect the same thing into the other central banks. But we are in this stage, though, where the central banks are reviewing their positions because of the geopolitical seismic shift that has taken place based on the new administration in the US. That plays its own role because it also affects the geopolitical landscape in terms of the balance of forces and in terms of the global affairs. I mean, on one side, we know that there's the exchange of hostages in the Middle East between the State of Israel as well as Hamas. On the other side, President Trump announced a significant number of investments, but there is an expectation that the relationship between the Trump administration and the Crown Prince of Saudi Arabia would be at its best. We know that that relationship didn't do very well under President Biden. Now we know that they got on very well in President Trump's first administration, and therefore the expectation is that it will come up. And why am I able to talk about it, but not just giving you my own views that may be biased? It's because already President Trump has announced a $600 billion investment that the Crown Prince has already communicated with him, of which as a negotiator that we know President Trump to be, he's trying to push that to $1 trillion investment. So already there is a lock-in investment that the Crown Prince has made, committed to the US. So that Saudi Arabia-US relationship is important in the context of President Trump having made a call for OPEC to lower the price of oil. Now, major players in OPEC, Saudi Arabia is one of those, Russia is one of those. The reciprocal tone from President Putin was accommodative and in agreement with President Trump, and the Crown Prince and President Trump get on very well. I'm sure the other member states in the OPEC would also look at the same thing. So there is an expectation that the price of oil might start to go down. If the price of oil goes down, it has a positive impact on inflation. If it's got a positive impact on inflation, you expect the interest rates also to go down, to go into that cycle. So there is an expectation that there could be an improvement of global liquidity. So let's see next week, a couple of events that are going to take place, important events, and therefore it's important to also put them in that same watch list that we spoke about, where you can go and check the events next week that are going to be important and the impact that we expect them to have in terms of trading. Now, these global events, when we talk about the global macroeconomic developments, as well as the geopolitical, these may be related to crypto when we talk about regulation in crypto, but really any trader, whether you are trading stocks, whether you are trading the foreign exchange, whether you are trading commodities, technology, you name whatever assets that you are trading, the same macro and the geopolitical events have an impact in terms of the global financial markets. Okay, I've been requested that I need to get back to the basics of trading and start to provide videos. I will certainly do that. I hope this weekend has been a good weekend for you to relax, to review your trades, and make sure that you are ready for the trading week of next week. At least you've got the watch list now. Today you can then finalize your technical analysis, take what I've given you as part of your fundamentals, and therefore you can then just go and check whatever other additional information that will help you to trade very well. So it's important to always follow these developments, because these developments affect trading, and as they do, they give you something to think about. Just to look at where the market is at, I would want to just check where the market is at in terms of the crypto market. So if we look at the crypto market, where we are currently, the crypto market is sitting at a market capitalization of about $3.746 trillion. And the volume of trades in the past 24 hours has been about $91 billion, with Bitcoin having the dominance of about 55% of the total market cap, and Ethereum with 10.6. The gas fee of Ethereum still remains high at 2.788 Gwei, which is the price at which the gas fee is at. Like I said earlier on, Bitcoin is sitting at around $104,694. So $104,694. It's been up by 0.2% in the past 24 hours. Ethereum is at $3,310.47 US dollars, and it's been up by 0.1% in the past 24 hours. Solana is at $254.91 US dollars, and it's gone up by 1.9% in the past 24 hours. As I was just talking to you, it's gone up by 2%. So it's gone up by 2% in the past 24 hours. And Cardano, to finish off with Cardano is sitting at 0.99 cents, which is close to $1, and it's been up by 0.8% in the past 24 hours. And really, the trending tokens is Mantra. Mantra has gone up by 26%. Red Belly Network has gone down by 15%. Vine is back. It's gone up by 51.5%. And the top gainer really has been Toshi. Toshi has gone up by 115%. Network Project gone up by 92.7%. And Onyx Coin, that has gone up by 65.7%. That's all that I have for you. That's just the market update for this past weekend. I wish you all the best in the week to come. May you get ready for trading and make sure that everything that you are required to have ready is done before then you take positions or retrace positions or update your positions. But be careful in whatever you are doing. Don't lose the money that you have worked hard for carelessly. If you lose it to the market because of the analysis that you have made, there's no guarantee in the market that whatever decision that you make will always be profitable. So you make some profit in some trades you lose some profit, but in between these two, please try and learn what is it that you did that maybe made you lose money, and what is it that you did that made you make money, so that you know what to improve and so that you know also what not to do going forward. I wish you all the best. May next week be full of profitable trades for you. Bye for now.